Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The dollar slipped slightly at the start of the week. The spotlight now falls on renewed safe haven demand after trade talks under the Trump administration hit a setback and on softer CPI data that reinforced rate cut expectations. These factors, mixed with ongoing geopolitical tension, are amplifying market volatility. With a busy week of central bank meetings from the Fed, BOJ, and ECB, short-term dollar bulls still hold an edge, but volatility risk remains high. WTI crude trades just above $61 as US sanctions on Russia and lower Indian imports of Russian oil tighten supply while easing trade tensions support demand. Both major crude benchmarks extended last week's 5% surge after sanctions were announced, though late session selling trimmed gains. Still, oil prices rose more than 7% for the week, the strongest rally since mid-June. While improved trade sentiment lifts demand expectations, markets are weighing the full impact of sanctions alongside uncertainties. Gold finds itself torn between competing forces. Early Monday, spot gold gapped nearly $50 lower to $4,058 an ounce, touching a session low near $3,971. The sharp drop reflected not only fading risk aversion, but also shifting expectations around monetary policy, trade developments, and equity performance. Although short-term sentiment has cooled, the prospect of a Fed rate cut and lingering geopolitical risks still lend gold some longer-term support. The yen weakened to around 153.25 as investors priced in expectations of aggressive fiscal expansion under Japan's new administration and lingering uncertainty over the Bank of Japan's next move. The BOJ is widely expected to hold rates steady this week, though policymakers may discuss conditions for resuming rate hikes should tariff-related risks fade. Overall, a dovish outlook and expansionary policy stance continue to weigh heavily on the yen. The euro remains firm around 1.165, marking its fourth straight day of gains in Asian trading. Support came after ECB Governing Council member José Luis Escrivá said he's comfortable with current borrowing costs as inflation nears target, giving the single currency a boost. However, political tension in France poses a risk. Socialist leader Olivier Faure has threatened to topple Prime Minister Sébastien Lecornu's government unless budget demands are met, including high taxes on the ultra-rich.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.